Right, let's have a look at part 2. Again, let's read through the information. Using the information in the above journals, very important. We need to look at part 1. We need to use the information as well as all the other information given. Disclose the roasting machine as well as all the other property, plant and equipment in the notes to the annual financial statements of ChocoCoffee Ltd for the year ended 31 December 20.11 according to the requirements of only IS 16. Please note, accounting policy notes are not required. Ignore comparative information. Show all calculations, round all amounts to your nearest rand. Important, if they do not indicate to you to ignore comparative information, you need to be able to identify that you need to include the 31 December 20.10 note section as well in terms of comparative information. Now, if we look at this, we need to include our roasting machine as well as all other property, plant and equipment. Right, now if you refer to our scenario, remember during our reading time, and this is important, we have identified, when you look at the left side, we have identified, yes, we need to include our roasting machine for 31 December 2011. And we now need to include our processing plant, which consists out of our land and buildings. But our office block, this is investment property. Therefore, we are not going to include this. Extremely important. We only include our PPE note. Now, part of your exam technique, as always, you need to plan. You need to have a plan of action. Therefore, when you look at the right side, what is your plan of action? Now, my first step will be to include my PPE template. Now, normally what I tell my students to do is to open a new page, and then on a new page indicate this will be question 1 and this is part 2. And you write down your template, which will be your land, your building and your machine. Extremely important. If you compare your PPE note with your investment property note, I just want to indicate this to you. PPE note, investment property. Your PPE, you have to disclose your land and your building separately. Therefore, you have to show land and building separately. In your PPE note, you have to show this separately. In your investment property note, you need to include land plus building in one column. You will have an opening balance, you will have a closing balance, and you will normally have your fair value adjustments, movements, such as disposal or acquisition. Then, my step 2, when you look at the right side, please, my step 2 is I will include timelines. Remember, I prefer to make use of a timeline. This helps me to ensure that I identify all of the information in terms of initial recognition and measurement and subsequent recognition and measurement. And then my step 3, I will perform my calculations. And step 4, extremely important, I will transfer my calculations from step 3 to my PPE note. Important, if you need to disclose your PPE note, you have to transfer your calculations. If they're not going to transfer your calculations, they're not going to mark your PPE note, because the requirements state to perform the PPE note, not to just calculate. Okay, therefore, in terms of my step 1, if you, sorry, not here guys, this is your PPE summary. Again, a warning. Beep, 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 beep. Warning. You have to work through this document, please. I'm not going to work through this with you. Okay. Now, in terms of your disclosure, sorry, I see the image isn't very good. In terms of your disclosure, you have to include your note. You have to include your amount at the beginning of the year. You will have to include your amount at the end of the year. And remember your separate line items. There can be additions, depreciation, revaluation, devaluation, impairment, luckily none, and derecognition, luckily none. If you look at your impairment, remember this is your IAS 36 principles, your impairment learning unit. Right, and then at the bottom, this is narrative information. Again, you need to explain to your users what happened during the year. Therefore, the readers of your financial statements, you need to indicate what happened during the year. And this is easy marks. Remember, we need to focus on our easy marks. Right. Okay. Now, on a new page, and this is your template. Remember, this is part of our plan of action, our step 1. We need to include our template, right? We've included our template. Look at this, no amounts yet. Again, land, separate column, building, separate column, right? The details relating to our machine will be from part 1 above, right? Then my next step, step number 2, will be to include my timeline. Now this is a timeline, guys. Let me just include this here the way that I include my timelines. Right, this is a little bit better. This is my timeline. Okay, so guys, when we refer back to the scenario, and please bear with me, I know that there's a lot of information that you need to be familiar with and comfortable with. Normally, I prefer to work through the scenario again, just briefly through the top, because I have read through this in detail. Now, I know when you look at the left side, I have my roasting machine, which I have recognized in part 1. Therefore, if you refer to our part 1 timeline, on the right side of your screen, we now need to extend our timeline here up until 31 December 20.11. Therefore, when you look at this, if we now need to complete our PPE note, remember, we need to include our carrying amount at the beginning of the year. We need to include our cost and our accumulated depreciation. Therefore, if you look at our timeline, the beginning of the year will be when? 1 January 20.11. 1 January 20.11. Therefore, what will the value be of our machine on 1 January 20.11? The cost price of our machine. If you look at our journal entry at the top of this page, we have debited our machine with a 3090,000. Therefore, if we now look at our PPE note at the beginning of the year, our machine will have a value of 3090,000. No depreciation yet. Remember, we've identified no depreciation yet. Now, again, if we look at our timeline, we now need to calculate the depreciation for the year of our machine. Remember, our machine is readily available for use on 1 January 2011. We have a value of our machine, which is 3090. Therefore, let's just do this at the bottom. I'm going to include here that this is my calculation A. At the bottom, calculation A, 30090 divided by the useful life. And they've provided this to us in the scenario. The useful life is 10 years and we have a residual value of 5,000. Therefore, 30,090 minus the 5,000 divided by our useful life of 10 years, and this will give us a depreciation amount of 2509. Right, our machine, we've completed this. Easy marks because we were able to provide the details from part 1. Now, if your part 1 were incorrect, guys, you would have still received mark through marks for the amount. Therefore, this is your easy marks. Okay. Now, next asset. Let's tick off our roasting machine, our processing plant. Right. Now, we know the processing plant consists out of our land and buildings. I am first going to look at my land. The land had a value of 1 million. They've purchased the land on 30 September 20.10, which is our prior year. Right. Therefore, in my note, in terms of my opening balance, I will have to include the value of my land. Look at this. The value of our land will be the 1 million from our prior year. Then, if you refer to the scenario again, you will remember they've indicated to us. Please look at the sentence above office block. On 31 December 2011, an independent sworn appraiser determined the fair value to be 1250000. Therefore, immediately we're able to identify that it has increased from 1 million. Therefore, there is an increase of the 250,000. But we need to indicate to our marker, how do we get to that amount? Therefore, again, this will be B at the bottom of our page, B 1250000 minus the 1 million, and this is 250,000. Right. Okay, next, our building. Therefore, when we now refer to our building had a cost of 2 million on 30 September 20.10. Therefore, if we look at our timeline, on 30 September 20.10, we had a cost price of 2 million. They've indicated to us that our building has a useful life of 25 years. If we refer to the scenario, useful life of 25 years and a residual value of 500,000. Right. And the building was brought into use on acquisition date. Therefore, if you look at my timeline, we've included our residual value. Now, our PPE note, we have to include an opening balance. Therefore, our opening balance will relate to the information of our prior year for this, guys. Therefore, we will have to calculate depreciation for 3 months, October, November, December. Right. Therefore, your formula will be to use your cost minus your residual value, divide by your useful life. Now, the cost will be the 2 million minus our 500,000, divide by 300 months. It's just easier if you make use of months because we only have to calculate depreciation for 3 months times 3 months. Again, guys, if you want to, you can include this at the bottom. This is calculation C, which is your 2 million minus the 500,000. Divide by your 300 months. How did we calculate this? Your marker won't know, and they're not going to take their calculators and re-perform calculations to try and figure this out. Times 3. Therefore, in terms of an opening balance, the value of your building will be your cost of 2 million minus your 15,000 depreciation, which we have calculated in calculation C at the bottom. Right, now we need to calculate the depreciation for the current year, and this will be calculation D. Again, I just want to show this to you on your timeline. If you look at your timeline, we now need to determine the depreciation for this period 12 months. Again, 2 million minus 500,000 divided by 300 times 12 now, right? Therefore, if you look at the bottom of your screen, again, we have our 2 million minus the 500,000 divided by 300 months times 12 months in 1 year, right? Therefore, we are now able to determine our depreciation will be 60,000, and this is our calculation D. Right, and then our narrative information. Sorry guys, if you look at this, I've included my calculation A. A cost that should be at the depreciation line. Your narrative information, which is your easy marks. This is easy. We need to indicate to the reader that that land was revalued on 31 December 2011 by an independent sworn appraiser. The carrying amount of the land, if it was carried at cost, would have amounted to 1 million. Guys, just study this. Know that you need to include this. This is part of the rules.